got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coast.
Well, welcome everyone back to this episode of the MrNotAdvice podcast. I am super excited that my favorite guest is back. He's become actually I guess I would say my podcast partner, and Mr. Greg Reyes. And before we get into that, of course, we've got our disclaimer that nothing in this podcast is an offer to buy or sell securities. Neither Mr. Reyes or I are licensed individuals, nor are we promoting, supporting, or offering any specific investment advice. Always check with your investment advisor before committing any capital, and never get your investment advice or any advice from complete strangers off the internet. Having said that, Mr. Reyes, how are you doing today, sir?
I'm doing fantastic. How about yourself?
I'm doing great. I'm doing great. It's a great fall day. Fall in Colorado usually lasts 2 weeks, so I have this week and next week. But I'm glad you're doing great. I appreciate you coming on today. And I thought today what I would do, I have some member questions, and I had some other questions drawn up that, if you don't mind, we'll start with ENVX. I'd like to go through some of these questions, and if I've got anything that I think of worth, I'll add afterwards, if that sounds okay with you.
Yeah, works fine for me.
So first I want to ask, because, I find it very hard when I just can't get myself to listen to fireside chats with ENVX. So I didn't listen to it. So would you mind sharing with me and with our listeners what your takeaway was from the fireside chat that Raj did on the 12th?
Yeah. I've listened to it a couple of times, and it's pretty clear that the intent and the setup in the fireside chat was for him to announce his cancellation of the NB5 filing, which would have led to him selling a third of all of his shares, around, I think the number is 639,000 shares. So I think this was kind of air cover for that. And there's some, self-proclaimed experts on Twitter that have been saying, oh, the 10b5 doesn't matter, doesn't matter, blah, 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 let him execute. I think that's bullshit. I think it shows that they don't know what they're talking about. And I think that Raj's decision to cancel the 10b5, in fact, supports my thesis that it was providing a huge headwind to the stock. And I think the stock's rebounded nicely since he did that. The other thing that was alluded to during that fireside chat is that they're very close to signing a second smartphone joint development agreement. We've had a couple weeks go by since this podcast. It hasn't been announced yet, but I've got to assume that, it's in the wings. So those were the two big takeaways, and drilling down on them a little bit. I mean, look, I like Raj. I think he's a great guy. I think he's very experienced operating CEO. I think he has a lot to learn about communicating and messaging Wall Street. And quite frankly, his explanation for canceling the 10b5 rang a little bit hollow to me, that he canceled it because, he wanted to buy a house. Just a bad look, never should have happened, but it's over. The one thing that he did say that I thought was positive is he said that he thinks the company's in the best strategic position that it's ever been, which is saying something. He alluded to the fact that they were close to shipping samples of the EX1M, which they've subsequently done, and they announced that on October 2nd. So, I think it was a positive call, and he laid out some milestones for how to track the company's progress going forward. So it was a net positive. I think it relieves some of the anxiety that shareholders were experiencing, and the stocks recovered in the interim.
It's interesting because one of the comments that one of our members made was, well, that's great. You canceled the 10b5, but they, in a private conversation, he even made the same comment to me. He said, well, I mean, shoot, if it's to buy a house, why are you buying a house up in San Francisco? And I said, oh, that's a good question. Why are you buying a house up in San Francisco? And I think that it goes back to this, and I don't think it's purposeful, Greg. I think that Raj just doesn't get it. I think he's an engineer, and I don't think he just gets it yet, that the CEO position of a public company does demand that clearer level of communication. And unfortunately, I sense a little stubbornness right now, where it's like, I'm not going to do it. I'm doing what I think is right. I don't know.
Well, so it's so interesting you say that, because I heard that Raj was discouraged from moving forward with the 10b5 filing by a number of people, and he did it anyways. And investors have suffered the consequences. And I have nothing but the utmost respect for Raj as an operator, but he's a little loose in the socket when he talks about things. One of the other things that he talked about on the Fireside Chat was that they're going to be shipping EX1M soon, which they announced on October 2nd. And then he said that they've had some samples of the EX2M, and they're planning to sample them by the end of the year. And that he, quote unquote, hopes that they'll see 20 to 30% higher energy density. When he said that, my eyebrows kind of went up. Like, did he really just say that? Because in prior presentations, he'd said that the EX1M would have 19% higher energy density as compared to the best-in-class lithium-ion batteries available in the market, and that the EX2M would have 30% better energy density. And now fast forward 2 quarters, and he's saying to 20 to 30% greater energy density. So is it sloppiness? Is it a poor choice of words? Is it only going to have 20% better energy density? Because at the end of the day, the difference between 20 to 30% better energy density with the EX2M has huge implications to their unit economic models. I don't know if he doesn't get it, or if he's sloppy, or he forgets what he said, but I have a keen eye for this stuff, and I'm paying attention to it. And I think, this has not been lost on me, and I plan to circle back and flush it out.
Hey, Greg, that brings up a good question about actually on the EX1. I promised my members that I'd ask you a couple questions. And this is a question. You mentioned the qualification samples being October 2nd. The question that they had for you, this person, was, will the EX1 battery be a battery that a company wants to use for a certain model, or do they want to wait for EX2 if there's a benefit? And if ENVX is successful, won't all companies want the best battery, but is there enough capacity? And that's from my member C-Star.
Well, that is a very good question. And one of my concerns has been that customers will just wait for the EX2M, which will begin sampling supposedly in the fall of this year, right? So why not just wait? And the answer that the company gave is there's more than ample demand for the EX, and that most likely will be in cell phone models that'll be shipping towards the end of 2025, and then they've got to do the whole new qual cycle with the EX2M. And that will have better energy density, and those will go in phones that will be shipping in 2026. So I've always been concerned that this will obviously date me when I use this term, phraseology, are they Osborning themselves with the announcement of the EX2? And they've indicated that they aren't, but at the end of the day, for this stock to really catch a bid and to achieve 50, 60, 70, 80, $90 share price, they've got to achieve their unit economic model, which basically presupposes a battery that costs $15 a battery with 50% gross margins, coming off a line that can do 1,650 units an hour. So yeah, I mean, it's been a concern, but the company says that they're not seeing that.
Thanks. Let me follow that up. I want 2 more questions. This is from Ladies on Film, and he wanted to know what your thoughts on BrakeFlow 2.0. If you think it's going to be a true game changer, and if they're able to have that version of BrakeFlow, how quickly can they get the manufacturing lines up?
Well, I think that's a terrific question. I think BrakeFlow is conspicuous by its absence. For those that have been involved in the ENVX story since it de-SPACed from being called Rogers Technologies, one of the key differentiators was this brake flow architecture. And TJ even did a podcast where he punctured the battery with a nail, and we saw the battery catch on fire with thermal runaway, and then we saw it done with brake flow enabled, and the battery didn't catch fire. Well, the company's been very quiet about brake flow, and they're not marketing brake flow. And they actually intimated a couple quarters ago that brake flow may not allow them to achieve the ultimate fast charge discharge rates that they want to, the number of charge cycles and energy density. So it seems like they've enabled it. Excuse me, it seems like they've disabled it and aren't using it and aren't marketing it, which is disappointing to me, because it sure seems like a key differentiator. And I can tell you, as a guy who had $1.5 million in insurance damages for a $50 DeWalt battery when it spontaneously combusted, I'm disappointed that we don't hear about it. But then again, we don't hear about the Army contract anymore. We don't hear about the medical device contract anymore. We're not hearing about EV prototype shipping. There's a lot of stuff that has gone missing that I'm curious about where these things sit, and brake flow's on my list.
And then the final question was, what are your thoughts, Greg, on OEMs actually investing their own capital in ENVX, either through buying into their stock or manufacturing lines? Ladies on Film was at Citrix in the early 90s, and Microsoft and Intel both invested about 5% prior to IPO. What are your thoughts of that happening today?
Well, so that's another terrific question. I mean, look, one of the issues that is an overhang for ENVX is access to capital. And I'm going to give you a very long-winded answer, but it kind of ties into another point that came out on the podcast that falls into the eyebrow-raising category for me. So, Raj said on the podcast or the Fireside Chat, that they had ample cash through a big part of 2026,
right?
And that they had ample cash to stand up and put one full high volume line into production. But if I go back to the TJ Rogers special presentation in January of 2023, they talked about having the agility line up and running in the fall of 2023. We all know that slipped into the second quarter of 2024, and that they would be exiting 2024 with 4 high volume production lines. And then they subsequently alluded to the fact that they thought they could do, almost $1 billion in revenue in 2025. And they did a convert, and they raised like $150 million, which was intended to build out those 4 lines. So fast forward a year and a half later, where are we? Well, the agility line didn't happen in the fall of 2023. It happened in Q2 of 2024. We don't hear about the 4 lines anymore. We hear about, hoping to have yields on the agility line of 90% by the end of this year, and that they have capital for their first line. So it's pretty clear to me, with a company that's burning around, call it $35 million a quarter, that, and is saying that they're not going to start ramping production until late 2025, that they're going to need more capital. And Raj said specifically that they're talking to the Malaysian government about funding additional lines, that they're going to be opportunistic in capital markets, which really concerns me, because that implies a dilutive capital raise, that they're looking at debt financing, and that they're also talking to customers. So tying it back to the question, I don't see, and the company hasn't talked about a customer making an equity purchase to raise additional capital, but they have alluded to the fact that they've had discussions with OEMs about funding their own dedicated production lines.
Mm-hmm.
And look, I still am very excited about ENVX and ENVX's prospects, but we've got to be sober about the fact that they basically have slipped a year. They're going to need to raise more capital. The entire business model hinges on the EX2M, which won't be sampling until the end of the year. And the CEO continues to use hedge wording when he speaks. They talked about the fact that they were planning to ship qualification samples by the end of the quarter, which they announced on August 2nd. But he said, we're going to get them samples, and I hope that they like them, which implies that they might not like them, as opposed to, we're planning to give them samples that meet their specifications. We will have tested them to their specs before we ship them. And we have high confidence that, if they have a successful qualification result, they'll commence high volume production in a program that will result in N millions of units. But, I got to be honest with you. And I wrote it down, quote, hopefully customers will like what we give them, unquote. So yeah, I think they're going to need to raise more money. Obviously, if they give a customer samples for qualification, the customer likes them, the customer wants to go to market, then there's the basis for a discussion about the customer funding their own dedicated line. On the flip side, if the qualification doesn't go well, or the customer wants to wait for the EX2M, which, in theory won't be in production until sometime in 2026, that there may be a disconnect and a difficulty bridging from here to there that may cause them to have to, look for other sources of capital. Raj talked about the fact that they're exploring debt financing, and that, if you've got one line that can basically pay for itself in a year, it increases the likelihood of successfully funding additional lines with debt. Well, to do that, you're going to have to be able to go to the person that's lending the money and show that you've got hard orders in hand that are going to basically make it likely or reduce the risk that, the loan won't get paid back. So I think there's a lot of moving parts here. I think it's very complicated, and I think it's very risky to come to any conclusions this prematurely.
I think, I guess my summary, and I agree with everything you said, except I think you're nicer about it than I'm about to be. I want the company to succeed, but every problem has been self-inflicted. And so my concern is the problem they've had prior to this has been not meeting milestones, delays. It's just been delays. I think you really have to step back if you're a long-term investor in this and ask yourself, well, what's the history been? Because moving forward, in order for them to meet, and I think they run out of money in the third quarter of 2025. I think they're going to try to play the pseudo accounts receivable financing game, which is we'll get a customer named, but we won't have an order, and hopefully that'll help us raise capital. I don't know. But if I look forward, just looking at their history, there's going to be more delays. That's just the company itself. Then you start involving, and you know this better than I do as an operator, as a CEO, now you're depending on other companies, other people, other individuals. My gosh, then it is a high probability there are going to be further delays. That doesn't make the investment bad. It makes it more risky because it's additional time. But I had this question the other day, which was sort of snarkily, do you think that gap down there is still going to get filled? And I said, absolutely. And I hate to say this, for all of these stocks, the ones that you're bullish on or I'm bullish on, there is a massive overhang. And I'm putting my neck on the line here by saying, I honestly believe that where we are today is multiples worse than where global banking system and economy was in the credit markets in 2007. And I expect that gap to be filled primarily because of that. But how that affects ENVX is if they're looking to go to the capital markets, their window's closed. They had their shot. They had their shot to meet some of these milestones. But now that window's closed as far as I'm concerned. And it's going to be closed, I believe, at least for the next 12 to 18 months. And that's if Kamala doesn't win. For ENVX as a stock, I own Leaps, 1% position. It's a just in case trade right now. It's in case they announce a new customer. I think this is how it's going to go. I think they'll announce a new customer. I think the stock will move up, and then they'll go quiet again. And then there'll be a delay of some sort, and then the stock will go down. And all that goes on here is that the stock remains incredibly volatile. When again, what you started off with, the CEO could tamp down this volatility. So I'd like to close this by asking you this question, because I made a mistake when we started off. Yes, I can't handle fireside chats or podcasts, but I did watch Raj's. The one I was referring to actually was TJ Rogers. So I got this Twitter message, that said, you don't know what you're talking about. And I just, I chuckled about it. I don't have to prove to anybody, but you know what you're talking about. The stock is up today because of the TJ Rogers podcast. You didn't, if you had watched it, you'd understand that. I still didn't watch it. So I wanted to know if you actually watched it because you're excellent at due diligence. And what'd you think of it? Was there anything of benefit or anything from it?
Well, so I listened to it because there was this rumor that it was positively affecting the share price. I listened to the whole thing, and it had absolutely nothing to do with ENVX. ENVX wasn't even mentioned. Anybody that said that there was some correlation between the podcast and the stock, I don't know what they were smoking, or maybe they were eating magic
Okay,
mushrooms.
I didn't miss anything, Greg?
No. And the only thing you did is you didn't waste an hour of your life that you can't get back listening to it like I did.
Okay. Well, and you don't have to answer this, but I'm curious. I know our listeners are curious. I mean, where are you at with ENVX now? Are you long? Are you short? Or you rather not say? Or are you just treading water right now?
Well, so when I saw that 10b5 hit, I just could not be an owner in size anymore. When a CEO is puking out a third of his position,
Okay.
just couldn't do it.
Appreciate it.
So I'm kind of trading it. I mean, look, if you go back, and at one point I owned in excess of 2 million shares of ENVX. If you go back to the Rogers Technologies de-SPACing and the Harold Rust, who was the first CEO, firing, the entire narrative was we've got unlimited demand, we've got a 5-year lead. All we need to be able to do is manufacture the battery at scale, and we've got a $1.5 billion backlog. That was like a no-brainer to be long this thing in size. Well, fast forward almost 3 years, and where are we? Well, there's a fit-to-market problem with the EX1M. Everything pivots on the EX2M, which won't be sampling. The $1.5 billion sales funnel has evaporated. We don't know where they are as it relates to actual customer demand. Raj, at one point early in his tenure, said he thought they were going to do in excess of $350 million in 2026. The line that isn't even set up as a high volume line can only produce about $100 million in revenue. So 2026 numbers are going to have to come down from what's out there from an analyst standpoint. The high volume line isn't up and running yet. He said, gee, we've got plenty of time to get it up and running at high volume in 2025 because, it's just running the existing machines faster. Well, the reality is they don't have a high volume factory in place, and there's going to be a requirement for a big capital raise. So once the capital raise sorts itself out, and once we understand what the actual revenue ramp looks like, then I'm going to get constructive in size, and maybe I'll buy another 1 million or 2 million shares. But right now, I think that the shareholders have unfortunately been subjected to a series of unforced errors because of delays, poor management communication, and an evolving story that is about as different from the TJ Rogers special presentation. From a year and a half ago, the only thing that hasn't changed is the share price. I think it was at $12 before TJ's special presentation, and here we are, and it's still $12. And it's I'd be lying to you if I told you I wasn't very disappointed.
Well, and I think before we move on to EOSE, I want to, those who listen, and we have a lot of people listening from Twitter. If you're listening to this and you're an ENVX holder and you're getting pissed off, I want you to think about why you're getting pissed off. Because nothing that Greg is saying, I mean, my gosh, I hear from investors all the time, well, I'd like to know what the pros think. Well, here's what the pros think, okay? You have a former CEO of an incredibly successful company from zero, right?
Mm-hmm.
So how many billion? 30, what'd you take it to?
At the high, we had a $24 billion market cap and 90% market share.
So for you listeners who listen is getting pissed off and want to, spout off about whatever, save it. Because at the end of the day, what you're listening to are opinions, but they're opinions from two people that between them probably have almost 6 decades of experience in related industries. ENVX, I'm looking for ENVX. I will try to get long. I've said that on Twitter, but it's a trade. My average trade is 12 days long. It's the same thing Greg's doing. Greg's trading it. So I'm sorry to speak for you, but I want to short this thing because I see lots of clouds on the horizon, and that's without even getting into the company. But in the company itself, absolutely. If they announce a customer and they somehow do that, yeah, I'm going to still be looking to short it because right now this thing likes to go down. It's the easy trade. So, but please, if you're listening to this, I do encourage you, if you're getting pissed off about what you're hearing and you're taking it personally, step back and really question why that is. Okay? Because that's not what successful investors and traders do. I'll end it by saying, Greg, moving on to EOSE, it's almost as if there's an inverse relationship between, on a fundamental basis, on a stock basis, EOSE goes up, and ENVX is going the opposite directions. Leading into that, how are you doing? What are your thoughts, about EOSE since our last podcast on September 16th? Specifically, I had a question from one of my members, and which is, what's your confidence level on the DOE? I still have high confidence, by the way, so I don't know where you're at with that.
Well, so EOSE is my largest position. I own many millions of shares of the common and notional. And the way I'm thinking about this company right now is, and let me back up for a second. This is a company that 9 months ago, we were concerned about whether or not it was going to even exist anymore, right? So Cerebus shows up. It's safe to assume that they did extensive due diligence on both the technology and the production capabilities and the backlog and demand and the market size, et cetera, all the kinds of boxes that I would certainly look at before getting involved. And so where are we today? Well, they achieved their first milestone in August, which they'd done by the time of our last podcast. They've got another Cerebus milestone at the end of October, where they get access to another tranche of $65 million in capital. All indications are, and I think anybody close to the situation has high confidence that they're going to achieve that. From a DOE loan standpoint, that's a $480 million loan at approximately 5% cost of capital. You had Camilla Harris at a campaign event talk about how she created 600 jobs at a battery company. That basically is indicating that she's aware of it and she knows that it's going to get funded under the Inflation Reduction Act. I've heard that the delays have predominantly been that now that Cerebus has showed up on the scene and is most likely backstopping the loan, that the order of creditors had to be redone. It seems like things are falling into place. Even more encouragingly, picked up from a number of sources that are close to the situation, that it almost doesn't matter how the election goes, because one of the founders of Cerebus was a very close economic advisor to President Trump. The technology that EOS has very positive implications to not only blue states, but also red states. And to the extent that the loan closes before the administration change, there shouldn't be any issue with them drawing down capital. Now, all of that said, I don't think that EOS needs the DOE loan to be successful and achieve their full potential. But to the extent that it does close, it's 5% money that can be used for all capital expenditures and operating expenditures associated with the deployment of the capital. Then they would have, $380 million of a Cerebus revolver that they can use for peak cash periods, whether it's to buy inventory or provide, some kind of a capital bridge. So I think it's going to happen. I think it's going to happen before the administration changes. And I think that it's going to put them in an absolutely phenomenal position from a balance sheet standpoint. So that's kind of how I'm thinking about it at the moment.
Is your sources, the one that I had was, it said that it was at the papering stage that, what you commented here, that Cerebus, obviously there was a change in the capital structure of the company. So, but that it was at least advanced to the papering stage. Are you hearing confirmation of that?
I am. And I think the fact that Camilla Harris made reference to it during a campaign speech implies that it's well underway, particularly since you already took credit for creating jobs that, they haven't even provided the money for to fund the loan. So I'm feeling really good about it. I think it's going to happen. Obviously, it's waiting is hard,
Yeah.
but I think it's going to happen, and I think we're going to see it. Does it happen before November 6th? I don't know. Does it happen before a new president is sworn in? I think the odds of that are quite high.
I think from a long-term standpoint, when I look at EOSE, there are some things, again, outlier events that, look, if any of y'all are long and you look in the mirror and you say, I figured this could happen. You had no idea. The fact that Cyrus was, the founder was on, an economic advisor to Trump, and the fact that the way they worded that announcement for the U.S. and its allies, and that EOSE has made it made in America. That's was it 94% or something? And the fact that Musk had a phone call with, I believe it was last week, with Josh Shapiro, the governor, talking about specifically helping rebuild manufacturing in the Pittsburgh area. And it's in the sweet spot of the industry. It's really, as you said, party neutral. So I think from a long-term basis, the opportunities, there are things that are happening, opportunities that could move the stock that nobody could possibly plan for. It's just incredible to me what happens when a company, good things happen when you have capital. I mean, it's amazing. I'm with you on the DOE loan, but I think it's become such a focal point.
Yep.
And I think it would raise question as to why. I think it'd be different if the company said, hey, we stepped away from the DOE. I'm more interested on the customer that Cerberus brought, that they are also lining up financing. Because I was telling my members, I said, look, I'll tell you how this works. Those guys that are lining up the financing, I know they want to get that deal done by the end of the year because they want to get paid. They want to get paid on lining up the financing. So there is that motivation. But also, I don't think Cerberus would be announcing that they're bringing a customer and they're also lining up financing, and then there's a problem with the finance. I don't know if you have thoughts on that.
100%. Well, let's wade into what you just said, because I think that there's a lot implied and a lot to unpack. And I think one of the things that I see is there's still a very, very short-term focus on, they went down to $2.60. The sky's falling. How they went up, 24 cents to, $3.16. Life's great. Honestly, I think many investors and many folks that I follow on FinTwit are very, very short-term focused. I'm not saying that people shouldn't trade it. Just the short-term trading mindset isn't what I'm looking for. I'm looking for 10 baggers. But let's go back and look at the 50,000 at this company from the 50,000 foot level. From a TAM standpoint, it conservatively, the long duration storage total available market to provide peak storage to be sold at optimal prices is somewhere between 250 billion to $1 trillion. There was a Seeking Alpha article where somebody said that they thought that the TAM was $1 trillion. So let's use the conservative estimate of 250 billion by 2030. What could EOS get of that? Can they get 5% of that? Could they get 10% of that? If they could get 10% of that market, this stock is X higher from where it is today. So you've got a huge TAM. Where are they from a revenue and sales standpoint? During the last call, the CEO said, we've got 9.5 billion in leads. We've got 12.3 billion in proposals out. We've got 1.4 billion in letters of intent. We've got $500 million in backlog. We think we're going to do between $60 to $90 million in Q4 and be contribution margin positive. So if that comes together, and oh, by the way, they've got a technology that is less expensive. It's optimized for operating in harsh environments where lithium ion cannot operate at the temperature range that the zinc aqueous battery can. They don't have the thermal runaway fire. It is environmentally friendly. And now if I bridge back to their presentation from December of last year, that they said in 2025, they thought they could hit somewhere in a range of revenue. The low end of the range was 400 million. The high end of the range was 800 million in 2025. And in 2020, the low end of the range is a billion to 2 billion in revenue. Now, if you take the low end of the range and you look at the model, and zero sum games put a ton of energy into this. X Times has, they were kind enough to share their model with me. You can be looking at from 15 to 40 cents in earnings. Now, what kind of multiple do you want to put on that? If you want to put a 25 multiple on that, you're looking at an $18 stock in 2026. If you want to put a 50 multiple on that, you're looking at a $36 stock. So, unlike an ENVX that doesn't have backlog, doesn't have their high volume production line up and running, and we have no visibility to what the revenue ramp is. And oh, by the way, everything is predicated upon the EX2M. I look at EOS and say this company has a $500 million in backlog. They've got 1.2 billion in letters of intent that I think are going to convert. They've got a high volume production facility in place that can do, 1.25 gigawatts, that with some additional automation can get to 2 gigawatt hours, which would be the equivalent of being able to do $500 million in revenue. They've got a product today that customers want today with a customer pain point today. It's not predicated upon the Z3 battery coming out by the end of the year. And the unit economics are such that this is a 60% gross margin business when you factor in the tax credits that don't expire until 2030. So I really like the name. I'm going to obviously end up making a lot of money or not, based on the company's ability to execute. I think so much of it relates to incremental orders and being able to really prove out that they can achieve the kind of revenue ramp that they've alluded to, which is possible. So I put my money where my mouth is, and hopefully it plays out.
It was inevitable, Greg, but I disagree with one point.
Yeah.
I think TAM. So here's my perspective on TAM. Before I get into this, I think the stock prices of ENVX and EOSE are switched. By the way, I think that EOSE should be where ENVX is right now, and I think ENVX, quite frankly, should be close to where EOSE is trading. If you're looking at just on a fundamental basis, on a go forward, at least for the next 4 quarters, yeah, but. TAM. So my perspective on TAM is this. When we went remember when the Chinese market opened, they opened in Shenzhen, all the special economic districts. So there was this flood of business, Western money coming in doing IPOs, and there was a lot of Western companies. And what I heard all the time was the TAM. There's 1.3 billion Chinese people, and all we have to do is sell our product to 1%. So for me, TAM has always been a loose, yeah, that's a good feel one, but it has to be relevant to, or it has to be correlated to, what is the probability that company is going to be able to execute into that TAM? Because the numbers that you're giving on the TAM, looking at this company, I would say, well, maybe they're higher. I mean, quite frankly. I mean, what do you think about that? So I sort of look at TAM like, it's a feel-good number, but you put value in it.
Well, and I'll tell you why, and this is how I think about it. So as part of my career, I was a divisional VP for a company that was in the wireless data collection business, and this will age me as well. Some of you out there may remember when you'd go and turn in your Hertz or Avis car, somebody had a funky looking terminal that communicated over Wi-Fi to give you your receipt. As it turns out, that was only a $1 billion TAM growing at about 10% a year. There were 3 players in the business, and each of us had about 30% market share. And it was a knife fight. Every deal was a knife fight. And it was exhausting. And at the end of the day, with a small TAM, you can only get so much market share. Okay. And the reason that I think that this particular TAM as it relates to either an ENVX or an EOS is important is with a TAM that enormous and with a technology that is so compelling where customers are going to change from lithium ion to alternatives because of the performance characteristics and the cost characteristics and the safety because there's no thermal runway. Somebody's going to end up getting that business. And the end utility pain point is so acute because they've spent tens, if not hundreds of billions of dollars investing in clean energy generation through wind and solar. But for their business models to be optimized, they've got to be able to sell that energy at peak periods, which typically is in the evening when there is no sun and there may or may not be any wind. So I just look at TAM as how big could a company possibly be, right? If you've got $1 billion TAM, it's impossible to be a $10 billion company,
Awesome.
right? But if you got a $250 billion TAM, could you do $5-10 billion? Yeah, you could. And I don't even want to go there or talk about this stuff publicly because the numbers would be astronomical. We'd be looking at $150 EOS price. I mean, I think to your point earlier, where's EOS valued at today? Well, fully diluted, it's trading at about $1.1 billion if you factor in all of the outstanding warrants. If this company was valued at $3 billion market cap, which I don't think is unrealistic, you're looking at a $9-10 stock. And I think it should be trading at that today.
Yeah,
And I
agree.
think that, as they execute and as the DOE loan gets checked off and they hit their Cerebus milestones and they have access to more capital and backlog converts, this thing's going to re-rate. And my only cautionary tale to investors is, don't miss the opportunity because you're trying to pick up an extra nickel when the stock's on its way to $5, $6, $7 because I think this could be that big.
I absolutely agree. And you and I in private conversations and publicly have said, again, it's if EOSE stocks goes in a protracted downturn, it's only because either they've screwed up something operationally, which is the best risk you could be in an investment, or the overall market really crashes. But even then, it just goes on sale. I mean, where I'm at is I was 8% of all my money in EOSE, and over the last, since I think September, that's when I really was adding. And then I've sold almost all of them. I'm down to 2%, but I'm trying to get back into EOSE using some Januaries and then out to 26 leaps because I see what you see. And just for those who are listening, I use options and I use leaps because it affords me, if the stock does get some volatility, I might be able to exit or add in. The other thing it does is it has time value, which is one of the components. So it actually buffers. The leap won't go down as much as the stock on a correlative basis. So, but I'm not making that recommendation. Anybody does it. It's just explaining why I do it. But yeah, Greg, I look at EOSE. I mean, let me ask you this: what are the milestones? And forgive me if you've answered this, but are there specific milestones you're looking for? I know Cerebus has the milestones, but what are milestones you're looking for?
Yeah, so that's a great question, and the way that I think about milestones is they're not so much milestones that if they're triggered, I think there's going to be a huge positive catalyst to the share price when the milestone achieved. There are milestones that will cause me to believe that my investment thesis is congealing, to
Mm-hmm.
hard foundation, if you will. So obviously, we've got this Cerebus milestone coming up at the end of October, which is predominantly associated with COGS and product-related milestones, I believe. That will allow them to have access to another $65 million in capital, which will just shore up their balance sheet. The next milestone is the DOE loan closing. And, we talked about that and the fact that it certainly appears as though current course and speed, it's going to happen certainly before and get funded before an administration change. The next one is, do we see new incremental orders and or do we see letters of intent sitting in the $1.2 billion bucket, convert to actual hard backlog that's going to be shipped? I think once those three things happen, the stock should re-rate, I think, to $2 to $3 billion in market cap, which is between $6 to $9. And then, I think that we need to see how the company guides to revenue for 2025. They're going to have to do that soon. And then I'm going to be looking for when they start to place orders for their second line, which, specs out at a cost of around $50 million. So assuming that they place the order for the line sometime, in Q4, early Q1, and they allude to it being stood up in the second half of 2025, then I can get to $1 billion in revenue in 2026. Those are the milestones that I'm looking for. Not like, gee, this is going to happen and the stock's instantly going to double when that hits the tape, but that is this cadence of events starts to compound on top of each other. The investment thesis congeals and it makes it more probable or increases the likelihood that they're able to do 40 cents a share and $1 billion in revenue in 2026, which equates to an $18 share price with a PE of 25. If they're going from, it was funny, I was talking to a friend, X Times, who is a good friend of mine yesterday, and I said, it's kind of interesting because at Brocade, I can remember we went from like 7 million to 70 million to 365 million, and the projection was to go to 600 million, and the share price went from $20 to $280 just on the growth from 75 million to 365 million. And I said all of those things are possible with EOS. I'm not saying it's going to happen, but it could. If they go from 60 million in Q4 to 300 to 400 million in 2025. They signal 750 to $1 billion in 2026, and they signal that they can do, 2 billion in 2027. This stock is going to be an absolute rip your face off monster, but a lot's got to happen.
Yeah, and I think I absolutely agree that on the DOE and the customer announce, my back of the napkin, just experientially, I'm like, at current price, if they announce a DOE, the thing goes above 4. They announce a customer, we're above 5 or 6. Now, if they do that sequentially, somewhat close to another, if they're able to, this has the ability, because of the short position in it, to hockey stick. I mean, this thing, I think, should be at $10 now, quite frankly. And it has that ability. You're making the case that from a fundamental perspective, looking not that far down the road, that they absolutely, this thing could be a $25 stock, $20 stock. So, people, I've got this question of why are there so many shorts? Why are there so many shorts? I really think some of the shorts are stuck. I think some of the shorts are stupid because this is, look, the Susquehannas of the world, okay, or private equity shops, they're not going to be playing in this because of the market cap size. And they're just not. They're going to be in larger companies. So I think these are smaller shops, and I think they just haven't re-rated. It's almost as if there's an inverse of gambler's fallacy going on, where no, these gambler's fallacy. We're looking at most recent history, saying, "Oh, that's how it's always going to be." Well, they're missing Cerebus. I mean, that's what caused the entire re-rating, but we haven't seen it yet, Greg. So factor that in with hitting some of your milestones too. Unless you think there has been a re-rating in the stock. I don't think, well, and the other thing is, it's not even over $5 yet. Look at the doors it opens to institutional activity over 5, right?
100%.
Yeah.
100%.
And if I'm right, and this market's about to take a big crapper, there's going to be a massive swing to value. There's going to be a massive swing to where companies get valued on fundamentals again. And I'm not going to say it's going to be a new beginning of the economy, because I don't think that's going to happen, but yeah, it's again another benefit, another outlier event that will benefit EOSE. I certainly don't think the end result of what's going now in the global economy is, hey, let's add more risk. I hope not. I mean, I hope they don't do that. But yeah, I agree. EOSE hasn't been re-rated, and I don't know why people are short this stock, other than they're stuck or not that good. I mean, what do you see as when I know you do this. Okay, what's the flip side, right? When you look at EOSC, what's my risk? I mean, there's always risk, obviously, but
Well, I mean,
on a macro fundamental basis.
well, I think the risk is, maybe they're not going to get these incremental customer orders, and the revenue potential for 2025 and 2026 isn't going to happen. Gosh, if Trump gets elected, he's going to pull the plug on the Inflation Reduction Act, and it's really going to hamstring EOS because they're not going to be able to take advantage of the loan. Gosh, what happens if the lithium guys realize that the zinc aqueous technology is going to, eat their lunch? What if they drop pricing by 50%? Those are all kind of interesting, untethered theories, but I don't see any proof that any of them are going to happen. It's a show me story. This thing is going to, play out, I think, in the next quarter or two. Cerebus milestones are met, the DOE loan closes and gets funded, and we see some incremental orders. I think we're looking at a stock north of $5. But I'm bullish, and I've shared my reasons why, and it's in the company's hands to execute.
And for those of you listening, from the options side, if you're trading options, me personally, I wouldn't touch an option that was shorter than out to January. Not with everything that's going on seasonally with the election, what's going on soon with the Treasury Department in terms of the massive wall that they're going to be up against. Looking out shorter than that, you're just going to have your option decay. Same thing with ENVX. If you're buying options on it and you're going 30 or even 60 days out, you're really only gambling. You need to go. At least for me, I'm not going out shorter than January on either of these companies. So I sold my Novembers last week for 75%. I think I'd open those in July, but those are my shortest options. I had to sell those because theta decay was about to eat my lunch. So, but barring any additional comments, I'd like to get in what I believe is going to be one of my favorite shorts in the coming year, if you don't mind, which will be BYON, Mr. Lemonis' company, not because of him, but because I think the industry that he is in has benefited greatly from cheap credit, and they're about to get killed. I think credit is contracting, and it's going to contract even more. And consumer spending is going to go down. We saw unemployment. I think we started the uptick. I think unemployment's going to explode. This is all bad news for his industry. That's if he was managing one company or one brand. He's got 5. So you listen to the podcast. I think he had one on 910. What were your takeaways from the webcast and your thoughts?
Well, look, let me be clear. I was one of the suckers that bought in hook, line, and sinker to Lemonis's guidance of, we're going to have 3 brands and we're going to, stand them up, and they're going to be billion-dollar businesses, and they're going to complement each other. We're going to do $2 billion in revenue in 2025, and we're going to do, 2024, and we're going to do $3 billion in 2025. And then 4 weeks later, he pulled out that guidance. He also was talking about, we're going to have influencers, and we're going to do this, that, and the other thing. Well, so where are we today? What I thought was very interesting about the Piper webcast was that, he apologized. He said, I made a mistake. I was too aggressive. I underestimated the complexity. I'm paraphrasing, by the way. Mm-hmm. And, I just thought 1 + 1 + 1, equaled 3. And I buy that at some level. On another level, I think that's just gross. Look, the guy was on the board since October of 2023. He stepped into this executive chairman role in February, which is basically all of the CEO's responsibility, plus a chairman of the board. Came out with this promiscuous guidance. Stock ran from 15 to 37, and then it continued to sell off, and is 50% below when the whole Marcus Lemonis pump started. What I found really interesting about the podcast is there was no mention of multi-billion-dollar brands complementing each other's and influencers that were going to be a flywheel for revenue. What I heard was that we're going to do some licensing, and we're going to do some lending, and we're going to create brand awareness without the cost associated with the promotion of the brand, and we're going to get access to the customer data. And once we have access to the customer data, it's going to give us the ability to create an affinity with the customer and custom tailor, what we serve up to that customer to get them to be not only a repeat customer, but a profitable customer. That couldn't be further afield from where this company was back when Lemonis came out with his, piss and vinegar. We're going to do 2 billion and then 3 billion. I mean, this thing is now so attenuated in terms of what it's going to be or what it could be. Because at the end of the day, great. Okay, so let's say you get all this data and you get all this data for free or for very low cost. What has he or the company come forward with that is going to indicate that they've got any unique intellectual property to harvest that data to generate high margin revenue? So, I don't know. I listened to it. There were a lot of buzzwords. There were a lot of things implied. There was really no specific other than the dogmatic belief that, gee, if I can get access to all of this data, I'm going to have a holding company that owns the data, and then the divisions are going to generate, high margin, reoccurring revenue. I don't know, man.
Hey, sounds like a
Huh?
sounds like a SPAC. We're gonna change our business model, and we're gonna go where we think we should go. And your first comment about influencers, last I checked, all you really have to do to get an influencer is to pay them.
Yeah,
I mean, they really
right,
don't give a
exactly.
shit, do they? I mean, seriously, they don't care. They'll support it. You just got to pay them, right? And if they want customer data, you can also buy that too, can't you?
Yes, you can. See,
So I'm not
but that
understanding what they're doing here. They're going to try to recreate the wheel, specifically in two industries now, in marketing and in data collection. But they can't data
well, see,
collect if they don't have customers, Greg.
but here's the thing that something's just slightly off, right? It's kind of like the if we build it, they will come, which I think is
Well, I think it was if I put my name on it, they will come. What
I'll,
Lemonis is finding out is Wall Street is very unforgiving about that. They don't give a shit. They'll turn on you in one day. Look what happened to Bernie Madoff. They will turn on you in one day. So I think it was, hey, if I put my name on this, I think, I'm not saying it's his fault. Well, sort of I am a little bit. But
well, you know what? I mean,
he's
look,
a CEO.
when you when you brand yourself as the fixer,
Yes.
and that you've got these unique Svengali like capabilities to turn businesses around. I don't know, man. I mean, I think this thing could be a value trap that could very easily be $3. If he can pull it off, it could be north of 20. But other than, hey, we're going to have this holding company and we're going to do these partnership deals that'll generate a few million in revenue. But gosh, our benefit's going to be getting this data, and we can take advantage of the data to have these reoccurring transactions, and that's going to be the moat. I don't know. It just sounds like a bunch of happy words and bullshit.
And you know what else it sounds like, Greg? It sounds like a lot of additional time.
Well, that's part of the trick, right? I mean, you're constantly dangling the carrot out about
Right.
how great it's going to be.
Yep.
But here's the one thing that he said that I think should send shivers down people's spines. At the end of the podcast, he said, gee, Q3 is typically a seasonally weaker quarter for us, and I've told the team to and this is a quote, I wrote it down, quote, generate as much revenue as possible, but it needs to be more profitable, even than last quarter, even if it means materially less revenue. So let me give you my chop on what's going on here. The multi-billion-dollar brands of business with the influencers are going to be symbiotic. That's gone. Now we're going to do these licensing deals, and these deals are going to give us equity, and they're going to give us the ability to get access to this data, and I'm going to data mine this, and it's going to give us a unique ability to generate reoccurring high margin customer business. But while I'm figuring it out, Q3 is going to be an absolute total disaster, which is why I believe they're going to have the investor event in advance of their earnings call, in the hopes of some kind of triage that before they announce this disaster of a quarter where, they chew up another, 20, 30, 40 million in cash through operations, they're going to try to sell everybody on how fantabulous it's going to be, with this new structure going forward. And Lamona's talked about, this is what I did for 20 years in Camping World. No, actually, it's not what you did. What you did is you bought a bunch of undercapitalized, poorly run mom and pop camping and RV dealers, and you roll them up. It's a
Right.
very, very different business model than what he's alluding to, which is even very, very different and much more complicated than talking about, I'm going to have 3 brands that are symbiotic and, I'm going to have influencers and all this other nonsense, none of which would happen. The only thing that has happened is they did sell the corporate headquarters, and it, frees up like 34 million in debt, and it generates 18 million in cash. But I can tell you unequivocally, having done headquarter moves, it's very disruptive, it's very distracting, and it creates a lot of Brownian motion, which is basically energy not being used in the same direction to create forward momentum while they're dealing with this facility sale. So I don't know. I think anybody that has any experience or any understanding of how things really operate, I think Q3 is going to be an absolute unmitigated disaster, and I think they're going to try to mitigate the damage by getting people excited about this holding company vision and these divisions that are going to have recurring revenue and it's going to be profitable. And I don't know, man. I think it's a no touch. I think it's just one of these crappy backwater and eddy companies that even if everything was perfect, going back to my model, it's a huge TAM, but there are multiple entrenched dominant competitors. And what unique value add do they really bring to this that would cause anybody to think that they could become a powerhouse? I just don't see it. I don't see
So
it happening. I hope I don't invent.
you're a strong bull then? Is that what you're saying, Greg?
Well, I'm not. I mean, I'm not.
I'm just kidding.
I'm pissed off that I lost millions of dollars because I believed in this guy and his bullshit that turned out to be fabricated. And by the way, there's some shareholder lawsuits that are happening now. Everybody says they don't mean anything. In this case, I think it actually may mean something because he admitted that he was reckless with his guidance, which does meet the standard of securities fraud. So I'm not short it. I'm not long it. I'm entitled to have an opinion because he lost me a lot of money. And I believed in, the bullshit and the sloganism, don't bet against Marcus. And where they are today, it's more than a show me story. Is there really a there? Maybe not.
Looking, I guess, following up, I am going to short it. I just haven't figured out what my entry is. I'm going to short it based largely not only upon our discussions, what you're sharing today, but I'm also going to just base it on recent history. I agree. If I was if I bought in, I mean, there's probably listeners saying, "Oh yeah, but they wouldn't possibly have an event, before they release bad news. I mean, why would they?" But yeah, I mean, in my history, that's exactly why. I think you said that, Greg. Probably why they're doing the event, right? Get some cover. Or maybe we can goose the stock a little bit because maybe the next event's probably going to be received pretty poorly. Let me ask you the other side. I mean, is there anything in the near term future that you would say, okay, it looks like they're righting the ship?
Well, Lamona said that, Q4 is kind of ground zero for them to show sequential revenue and operating performance improvement. But if that happens, great. Maybe it's investable. If it doesn't happen, I think the stock's on its way to $3.
Yeah, but how are they going to do that if they're switching course?
I mean, honestly, I don't know. I mean, I guess that's what he's going to talk about on October.
Yeah, and they're moving on. Do you know if they downsize their square footage or not?
I don't know. All I know are the financial implications of it. I mean, I think that the first instantiation of that corporate headquarters, it was like a shrine to the prior CEO, and
Okay,
it was like a probably had a statue of him out in front of it. I mean, I don't know. Obviously, it's going to save them money, but at the end of the day, if you're in the business of selling furniture, apparel, and toiletries, what do you bring to the game that is unique, that gives you a unique competitive advantage to be able to do it without having to incinerate money to buy revenue and do it unprofitably? And by the way, I think Wayfair is the best at that. And that company at some point is going to be in a world of trouble with their debt overhang. But like, what's to get excited about here? I just don't see it. And if I piss somebody off, that's not my intent. I'm just being as transparent and truthful as I can be. And I think I got a right to have an opinion because that guy cost me millions of dollars, real money that I worked hard to earn because I believed he was the fixer and I believed in his guidance. And now here we are with some new story about, generating data, and we're going to mine the data and own the data, and it's going to give us this unique capability, but he doesn't explain how or put any numbers to it or show a business model and how it's going to play out so that somebody can try to calculate a future enterprise value. Right
Well,
now, I was just going to say, right now, my bet is that Q3 is going to be an unmitigated disaster, and maybe you can get people excited about this strategic event, which I've never seen in 30 years. Somebody try to pull that off successfully, but maybe he can. He's the fixer.
well, and looking into in terms of those listening to, if pissing people off, I repeat what I said about ENVX. I mean, if you're getting pissed off about something that, look, I'm just going to share it. If he lost a lot of money in this, he's got the expertise. I mean, if you're going to get pissed off about Greg's saying, step back and ask yourself why. I mean, literally why. I obviously don't know the company as well, but from a trading perspective, when I hear a man like Greg, and I've also done other analysis in it. I'm not an expert at macro and fundamental, but they're changing course. And what they're proposing is going to take time. And they don't have time. They don't have time because they're going to run out of money. I mean, they needed to hit the ground running. They stumbled. So for me, again, and then you take in the overall macroeconomic conditions and what I think is going to unfold here in the next 12 to 16 months, 12 to 18 months. And my gosh, even if they do everything right, they could be going into one of the worst consumer cycles we've seen. I mean, it is, and they're in an incredibly tight margin business. You asked, toilet paper and stuff. Price. It's price. It's all about price, right? Price. And so, yeah, I don't. The bull case on this, I don't understand. I will say, if he mentions AI in that investors event, then I will think that what he's trying to do is pivot away, because he went to data center and then he can go to AI and maybe trying to do a quick and dirty rebrand, at least on part of his company. If he does that, I don't know what he's doing. So, do you think that's what he's trying to do?
I have no idea what he's trying to do. He may not even know what he's trying to do beyond the big buzzwords. But
Okay.
if there's any chance of him being successful with what he implied, he needs to be able to explain what their unique intellectual property is to uniquely take advantage of that customer data that's going to allow him to have these repeat profitable transactions. And I find it hard to believe that they're more advanced than Amazon or any of the other big customer facing e-commerce companies. I'm not short the stock. I'm not long the stock. I've obviously been Lamonist. I'm not happy about it. And what I'm seeing on the horizon is something's very, very wrong with this picture. Q3 is not going to be good. It's all going to come down to, believing this vision for this holding company and getting this customer data. So why would I believe that? I mean, it was easier to believe I'm going to have three brands of business. They're going to be $1 billion each. They're going to complement each other. And I'm Marcus Lemonis, and I'm friends with Carrie Underwood and Dale Earnhardt Jr., and I'm going to get all these guys on board, none of which has happened. I think that was more credible than what's implied here, but we'll see. I hope everybody makes a lot of money. I've got some very dear friends that are long this thing, and I hope it works out for them.
Yeah, and I guess this is a good place to end, and I really appreciate all your time today and your wisdom. I think it's a good place to, and we offer our opinions and our experience, not because we celebrate when people lose money. We're in fact trying to do the opposite. If you're in the position, maybe you talk to an expert about perhaps getting some insurance, hedging it a little bit. If you've sized up too much, maybe you start thinking about reducing some risk. Listen to what Greg is saying, listen to what I'm saying, and apply it to what your current situation is. But understand, both of our goals, both of our hearts are, we want people to make money, but obviously we don't want to see people lose money. And no, I'm not always right. That's for sure. But I don't want you to take what we're saying as criticism, take it personally. There's nothing personal about investing. And I don't know if you want to add to that and close us out, Greg.
No, I couldn't agree more. I just want to see people be successful. I don't want them to become hypnotized by, pumpers that promote themselves and imply that they've got track records that they really don't. I've spent almost 40 years as immersed in the technology business, and I have a proven track record, and I want to share my insights and musings, and I'm happy to share my investment thesis and tell folks what I'm doing. And look, I got burned, just like many people got burned in this Beyond fiasco. But I do have the expertise to say, hey, this doesn't look right. It doesn't look right to have an event right in front of your earnings that have been scheduled in advance. And why would you do that? And what are the circumstances that I've seen in the past? So I hope that, if you got something out of this, great, then it was worth my time. But my intent, is just to share my thinking and think openly and have a good interaction with my my colleague here. And if you take something positive away, great. If not, and you're upset, that wasn't my intent. And maybe you should be looking at the individuals who haven't executed along the lines of what they had signaled and be mad at them instead.
Well, I couldn't close it out any better. Thank you for listening today. And we'll let you know when our next podcast will be together. And have a great day.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the